this takeover by JPMorgan Chase, buying First Republic Bank, or at least what was left of it. In the meantime, earlier today, I spoke with Adam Kobeissi with the Kobeissi letter. He follows all of this very closely about what this means for the banking industry, what this means for inflation and interest rates. Obviously, the Fed board meeting happening this week, too. So here's our conversation. And in our continuing coverage here on Live Now from Fox of really the implosion of First Republic Bank and its takeover by JPMorgan Chase, let's talk again to Adam Kobeissi with the Kobeissi letter. Adam, good to see you again. We spoke on Friday, and a lot has happened over the weekend. So JPMorgan Chase buying First Republic today. Did you have that in the cards going into the weekend?
Yeah, so like you said, a lot has happened since Friday, and when we were last on, it was pretty clear that something was going to happen this weekend, whether that was the FDIC seizing the bank or an acquisition. We were expecting something to happen, because if Monday came around and First Republic was still around, the stock would have continued to crater. As far as JP Morgan, it's a pretty interesting target. I mean, that was expected, but there's also regulations that say if you're a bank that controls at least 10% of deposits in the U.S., you're not allowed to acquire another deposit-bearing bank. Well, JP Morgan controls 15% of the deposits, so there was an exception made there. It's also interesting to see that the acquisition happened technically after the FDIC seized the bank. So this comes with a lot of perks for JP Morgan. They're sharing $13 billion in losses with the FDIC. They received $50 billion in loans from the FDIC, and it seems like JP Morgan is really coming out ahead from this whole transaction.
Yeah, Adam, I was going to get to next. Who are the winners and losers in this transaction? Because over the weekend, PNC was kind of in the mix as a potential buyer, and then we learned today JPMorgan Chase. So aside from First Republic Bank as the clear loser in this situation, does JPMorgan Chase really come out on top?
Absolutely. I think this entire regional banking crisis has just been a big win for all the large banks. Ironically, large banks are winning this banking crisis. I think, JP Morgan is expected to make $2.5 billion immediately off the close of this transaction. And then they're also expected to profit $500 million a year in incremental net income from their addition of First Republic. And this doesn't even include the fact that the large banks have already seen massive inflows of deposits, specifically coming from smaller banks. So I think, smaller banks are continuing to feel the pain here. It's unclear who, if any, will be the next First Republic to go down. But I think the clear winners are just these large institutional banks. They're providing the safety and still paying very minimal interest on these deposits that people want, and people are flowing directly into these banks, especially for those above the FDIC insured limit.
Yeah, Adam, I want to talk, though, about this law, and I believe it was put in place after the 2008 financial crisis, about these major banks, major institutions controlling a certain share of all deposits in the United States. That's a law on the books. JPMorgan Chase was allowed to bypass that law for this sale. Why?
Yeah, that's a question that we've been, vocal about, and we're trying to find answers to ourselves. And I think really what this crisis has taught us is that in times of uncertainty, there are exceptions made to these rules. I mean, the FDIC is continuously, we've seen this 3 times now. They seize these banks on a Friday, and by Sunday night, they need the bank either sold or they need a solution in place, and they're scrambling. I mean, there's headlines coming out almost every hour when this happens, and then it comes to the point where it's 4 a.m. on a Monday, and JP Morgan's acquiring the bank, sharing losses, bypassing rules. And I think it's just a continued testament to the fact that the regulatory response to this crisis has been a little bit scattered, and large banks are winning this crisis. They're taking advantage of the situation, and they're using it to grow. Consolidation has been a trend in the banking industry for 100 years. It's only accelerating now.
Yeah, let's talk, though, about mid-sized regional banks. You posted on Twitter today how a lot of them, their shares are down precipitously today. Are we seeing, do you think, the sunsetting of confidence in these low-size, mid-sized regional banks where Americans might choose just not to do business with them anymore?
Yeah, so for those, I think the market reaction today is really just a lot of investors are saying, have we forgotten about the smaller banks? I mean, JP Morgan came out, Jamie Dimon said, the regional banking crisis seems to be over. This was the last bad apple out there. But it seems like a lot of these smaller banks have been forgotten about. And in particular, with those accounts that are above the 250,000 FDIC limit, something needs to be done to restore confidence in smaller banks, because you don't want risk when you're depositing money in a bank. That's the whole point. You don't want outsized risk. You don't even necessarily want a return. You just want safety. And if you're not able to get that safety as a large depositor in small banks, the flight to larger banks is going to continue unless something changes. And today there were some rumors emerging of potentially raising the FDIC insured limit for business accounts. That could be a solution. But something needs to change here to restore confidence, at least temporarily, in these smaller banks.
Yeah. I don't want to sympathize too much with a lot of these shareholders and those who have deposits, $250,000 plus, but they're kind of out of luck with all of these bank failures. They're kind of twisting in the wind as well. I want to talk about them. What happens to them? Because you heard earlier today, President Biden was speaking about small business owners and the economy. And he said, don't worry, American consumers who have their deposits in these banks, they're safe. But the shareholders, out of luck. What's your message, though, to these shareholders?
Yeah, so depositors, like you said, they've been safe. No depositors have really lost anything, and that continues to be the case. It seems like the FDIC and regulators, they're very avoidant of using the term bailout, and bailouts generally refer to equity holders, these shareholders of these banks. After 08, they don't want to. Bailout has a horrible social image behind it. They don't want to be responsible for bailing out shareholders. So what they're doing is they're siding with depositors. And the three cases we've seen so far, depositors always came out fully assured that they could access their money. But the shareholders are, like you said, I mean, First Republic got halted indefinitely today at $3 a share. Shareholders have almost lost all their money in these banks, and that continues to be the precedent. So it's hard to see a case where shareholders are going to be bailed out or receive their money back in the way that these deals are being structured.
Yeah, and you kind of alluded to the very quick nature of these sales and how they, transpire, especially in a very short amount of time over the weekend. What if, say, the FDIC, Treasury, what if they had not found a buyer for First Republic come, Monday morning? Where would that have been, do you think?
Yeah, that wasn't something that they wanted to deal with, clearly. And I think what would have happened in that case is that they would have seized the bank, just like you saw with Silicon Valley Bank. And then they would have had to say all deposits at First Republic are backstopped or guaranteed by the U.S. Otherwise, this panic starts to spread again. Again, it's all human behavior here that's leading to these crises. And they really did not want a scenario. And clearly, that's why JPMorgan got such a great deal on this bank. They did not want a scenario where we went into this morning and even later into this week with First Republic not being sold or not being assumed by another party.
Yeah, Adam, just last question. I know you're very busy, but this is just Monday. What are we looking forward to? What's in store, do you think, later this week? What do you have your eye on?
Yeah, there's never a dull week anymore in the markets. I think the Fed meeting is coming up on Wednesday. We expect them to raise interest rates by 25 basis points, and that's largely priced in here. I think from there, guidance is going to be key. Nobody really knows. Right now, we have a lot of split outlook on what the Fed's going to do. So people want to see, is the Fed going to start to say, all right, we've had 3 banks collapse now. We're going to start to alleviate on interest rates a little bit and stop raising rates. But at the same time, how do they manage the inflation picture? So there's a lot of moving parts going on here. You have the earnings coming up. You have Apple earnings. You've got weakness in the banking sector. You got inflation. It's a lot to manage at once. And I think this week will give a lot of color as to what's coming next.
All right. Adam Kobeissi with the Kobeissi Letter. We'll talk again. Thanks for your time.
Thanks for having me.